Welcome to the midweek market update, where I do a technical analysis and give you my thoughts on the broad market, SPY the Qs and IWM. After that, we will jump into our core list of companies because I think some of them are setting up better than others. So jumping into our S&P analysis, whenever we see or feel or experience something that looks like stronger selling, I think it's important to come back to a weekly time frame and just evaluate where we stand, right? The weekly bar is still essentially sitting up here at all-time highs. We did not even trade into the prior week's range. I mean, nothing about this candle was anywhere close to a pullback, to a market correction, or a market crash. So anyone who told you that today just, again, simply is not looking at the larger time frames. I do think, however, that moving forward, it's really important to understand what went on today. Where did this selling come from? And more importantly, who's in control of the marketplace? Because from that, we can make better trading decisions, okay? So this morning, nothing more than, again, a liquidation break. What's the liquidation break? It's where we see selling hot and heavy come out of nowhere, right? We were at all-time highs. There was really no structural break that caused this selling. And then we retraced the majority of that move either the same day or the following day or very shortly thereafter, okay? So this is a classic liquidation break. Now, more importantly, who caused this liquidation break? It was the short-term traders. Now, how do we know this? Let's take a look at what was going on, right? We had a prior two-day balance, and this double top in here was indicative of longs with poor trade location. And we'll get into that more on the market profile chart in just a moment. But for now, we had a double top, poor trade locations, and longs trapped up here trying to anticipate the break to the upside. They were not getting paid. So they have a few options. They can either hold and try to wait for that breakout longer, or they can just sell the position, right? And that's sort of where we get that upper wick on Tuesday from. But the people who held, right, we hold into Wednesday, and boom, we get a gap up. So now you have another choice. Do you sell into the gap up because now you're getting paid, or do you hold on? So I'm sure some of them sold and some of them hold. But where do you put the stop loss if you decide to hold? Well, the only logical place is just below the two-day sort of balance highs or the breakout area. And as the gap fills and it starts to move even a little bit lower, what do those traders do? They liquidate the position. And again, that's where the panic sets in and people just say, that's it, I want out. I wasn't getting paid for 2 days and enough is enough. I just don't want to be long up here at this poor trade location. So that's where the selling came from. But that was the chance for, stronger sellers to hop on and say, okay, we're going to move this marketplace lower, but they never came either. And that's once again the second characteristic of the liquidation break, taking back a majority of that move to the downside. So why do I tell you this story about how today's action unfolded? Well, it's to illustrate that who's in control? Again, it's the short-term traders. It's not the new money buyer, and it's also not the new money seller. So what that means for us going forward is that there's an extraordinary amount of risk here for anyone who's trying to position themselves for a swing trade, either higher or lower, right? There was no strength from either side of the trade here in terms of longer term players. So that being said, probably not the best trade location here for any swings. What can we do moving forward though? We need to sort of work with these short-term traders and follow in their footsteps, right? That's the best we can do as short-term retail traders. So fresh in the mind of the market is going to be the liquidation break low here at the 387.50 mark. If that breaks, I see no reason why we wouldn't come back and retest this structure high here at the 385 mark just about. And if that one breaks, okay, then this is where I think we open the door to potentially fill this gap between the yellow lines from 379.62 all the way down to 377.37. Now, if that happens, right, this is poor trade location for new money buyers, right? We've talked about this concept in prior midweek market updates. What does that make this location down here? Well, it would be excellent location for the new money buyer for a number of reasons, right? We've repaired structure. If we fill the gap, we have the trend line acting as support. We have prior balanced lows acting as support. We have 50 SMA acting as support, okay? So great trade location for the new money buyer to get involved if we come down and, repair that structure, give them a more meaningful meaningful pullback to buy here in this marketplace. But until then, again, I think the risk here remains incredibly high, and it's kind of a question mark. You have to take it day by day. So let's go ahead and talk about our sectors briefly before we move into internals. Sectors here on the left, energy leading to the upside, not very important. We know that it's a very small weight. Same thing with biotechs to the downside. Where's our heaviest weight? Well, XLK pretty much flat down 0.15%. XLF up next is essentially, as flat as it gets at 0. And then XLV, we'll throw the third one in there, the healthcare sector. The third heaviest weight was up 0.18%. So again, these three things combine essentially a flat market, right? So this sell side activity had no strength behind it. If it was stronger selling, you would have seen -1%, -2%, -3% in all three, again, of those heaviest weighted sectors here in our S&P, but that wasn't the case. Let's go ahead and move into internals now. Internals, I think, did a great job today in illustrating that we had nothing more than liquidation break. If you don't know about internals, go ahead and watch this video first. It's linked up here in the top right. It's the all about the market internals here. There's some cool scripts you can get there to make yours look exactly like this. But anyways, the volume here and our breadth readings absolutely at no point during the day indicated that we had stronger sellers, in the marketplace. If we did, we would have seen readings again. If you watch that video, we know that to the downside, we need readings of at least -3 to 1 before we even really start to say that there was some strong sell side activity. What did our volume reading actually do? It dipped below 0. If we saw stronger sellers come in, it would have gotten rejected on the back test of 0 and then moved lower. Instead, it clearly went higher into the end of the day. So there was no volume really supporting the move to the downside. People weren't just, panicking out and really methodically selling any long positions today. As a matter of fact, as noted by this, they were actually buyers out there, okay? Next up, advanced decline line, quite clearly, if I get rid of that, right off of our trend zone, right? We opened in trend zone, but went straight to the 0 line and then chopped around it. Again, if it was more bearish out there and this was some stronger selling, it would have, been a trend down, something like this, all day. Just wasn't the case, all right? And possibly the most important internal of all for determining emotion in the marketplace, bottom left-hand corner, is our tick. We obviously opened on a gap up, so our tick was extremely high. But what happened with that tick, right? We went from extreme high to extreme low in a very short period of time. Normally what we see is a move like this, maybe we meander a little bit and then move down here, but no, it was pretty much wall to wall, indicating, again, very emotional selling there at, very close to the open and as the gap started to fill today. So all that combined, right, everything that we just talked about, we know that these are emotional sellers, not stronger, longer-term sellers. And most importantly as well, how do we know that? Boom. Our follow-up tick here pretty much, again, goes wall to wall from our extreme oversold pretty much right up to our 800 read, which is indicative of short covering. So anyone who tried to short that breakdown this morning, panicked immediately out of it. So it went in both directions. Again, I think everything that we just talked about supports the thesis that it was a liquidation break and we still have short-term traders in control of the market. There are not stronger buyers and there are not stronger sellers. Let's go ahead and talk about market profile now and what I meant by the poor high and, the trapped longs. Well, that's simply this section of the chart right here. I mean, we have these two prior highs, one here and this cluster in here, that were indicative of people not getting paid at the highs. Specifically this day here on Tuesday, we know that when we have two letters stacking side by side, that is a poor high. That is the improper end to an auction. What we always look for is meaningful excess, like we saw in this M period over here. So as people tried to take the breakout here of the K period high during M period, I know this may sound confusing, but as they try to anticipate that breakout up, they don't get paid. As a matter of fact, we see a huge shelf here, right? So that being said, all of these people are trapped at poor trade location. And once again, as we break the next day, they sell into that. And, the rest was history. We talked about that price action. But what can we do with today's market profile information? Well, I think we need to consider this, what happened in the morning there, a spike. And the way we treat this on market profile is as follows, right? We have the top of the spike here and the low of the spike. If we reject the spike, it means that we hang on to this area here as support. It just so happens to coincide with value area low on the day. So that area is going to be roughly around our 3890 in the S&Ps. If that area breaks, you treat the spike as a gap, almost very little area of market structure there. So we should move to the low relatively quickly. And we talked about that low of day on our regular candlestick chart. So moving back over to our Thinkorswim, let's go ahead and wrap up our broad market analysis here. Again, having to take it day by day here, we'll move over to the Qs, and you'll notice, again, same exact picture. Our liquidation break based on the poor high here, it was not as clear. Instead, we retested key market structure and held it, right? So that is a bullish thing. Again, I think the same thing applies with shorter term traders in control. Is as long as we move higher, right? It's whole and half dollars intraday levels that form. If we fail to hold on to, today's low, that 330.20 mark, we'll call it, then again, I think that opens up, just like in the S&P, a move to potentially fill the gap below us here in the Qs, which is from 325.42 down to 323.50. Anything underneath, definitely look for that support trend line as well as 50 SMA to coincide. But again, short-term traders in control, I would pretty much advise that into the end of the week, we wait for either a move over today's high or under today's low before getting extremely directional, right? If we trade inside of this range here, I think we just fade the extremes high and low, okay? So moving into IWM to wrap it up, this one saw the biggest hit in terms of percentage, and the liquidation break here wasn't, as clearly taken back, right? During the day, intraday, absolutely, we did move quite higher. Let's actually just, illustrate that on like a 30-minute time frame. You can see here, we definitely did move higher, right? Above that 50% mark of the sell range, but towards the end of the day, the sellers did try to get another foothold here in our small cap. So zooming back out to a daily time frame to give you some levels, keep in mind there is a gap here in IWM underneath 223.31 down to 221.85. That, I think, is a great potential target early on Thursday. If we take out today's low, boom, that would be your target. Look for the gap fill there. Support trend line is underneath, again, into blue sky territories, whole and half dollars intraday levels that do form. Based on everything we've talked about, I don't want you to be overly bearish here, and I also don't want you to be overly bullish in any of the broad market sectors we've just covered. Moving into our companies now very quickly, time is of the essence. Apple, not really doing much here. I think that we're clearly setting up now the head and shoulders, right? So I would expect potentially a revisit here of that 131.17, 50 SMA, as well as support trend line. Moving over to Netflix now. This one's actually setting up quite nicely. Again, the liquidation break was here today in Netflix, and we maintained a pretty strong rally and held on to this area of market structure. So early on into Thursday and maybe Friday, depending on how Thursday shapes up, definitely looking for a breakout over that 566 level. We'll just round that up to the next whole dollar. I think there is room to run after that, so that is a setup I will be watching. Tesla, this one came into key daily support as our levels load in just a moment here. I'm looking for a little bit of a dead cat bounce. Again, we do have another sort of intermediate support below us at 780 that will coincide, again, depending on time of week, if it's maybe on Friday with our support trend line. So it's something to watch out for. But again, probably anticipating a little bit of a dead cat bounce here early on Thursday, Friday. Alibaba, this one's, setting up decently. I want you to keep in mind the poor structure, the gaps, right? If we trade into the gaps, I think they fill relatively quickly. So we're really looking for over 271.25 in Alibaba. Facebook is another one that's setting up just like Netflix. We are breaking out of this sort of area of consolidation, and I like the fact that these highs are relatively similar. So looking for a breakout there over that area of support, or rather resistance at the 273.50 mark. Nvidia, this one's been on an absolute rip, finally breaking out of this range that we've been stuck in. If we can continue to make new all-time highs up here, I would just monitor for continuation as we see that pre-earnings run up, okay? Next up is Microsoft. This one actually doesn't look as good to me. It looks like we tried to get a little bit of acceptance into blue skies, but now we're trading back and accepting into this choppy range that we've been in for quite some time. So this one, in my estimation, is not really worth watching for an explosive move to the upside, kind of like we have in Netflix and Facebook. And then lastly, Amazon, right? This one had a liquidation break into key daily support. We had prior resistance, then turned into support once. We'll see if it holds this third time. Again, not really the greatest daily setup, but potentially looking for a little bit of a dead cat bounce here in Amazon. So that's going to wrap up this week's episode of the midweek market update. Again, I really want you to take away the S&P analysis. Okay, this is how you have to think about the market coming in on a day-to-day basis if you're trying to be either a swing trader or a day trader, right? You need to know who's controlling the marketplace, and hopefully the information we've talked about today has given you the tools and the know-how now to identify who that is. So everything considered, I wish you a green rest of the trading week, and I hope to see you in the weekly watch list on Sunday.